Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. And guys, stock market is not the economy. We're going to show you a metric that's going to drive the point home. Let's dive in.
Trade Genius.
Drive the point home, no pun intended, Bob. But yeah, this chart here is pretty telling,
Yeah.
isn't it?
Yeah, and look, it's scary. I mean, I think the automobile market has left the orbit for people's ability to afford it. And I think with the layoffs happening and people getting squeezed in other places, and people are just not paying their car loans off. The thing that's really wild, Phil, is that, I just bought a new car, actually a truck, and, my truck is a hot spot. And, the terms and conditions of the financing is that they know where my truck is. So, I think the job of 2025 might be a auto repossess guy. It'll be a lot safer than it used to be because you usually had to find the car, find the truck, and had to deal with the person. Now you can just wait for them to go to the grocery store and steal their car back for the dealer. So, but this is scary stuff, Phil. I mean, these moves are amazing, and these always precede a recession. And you're going to hear a lot of stuff about, well, we're not going to get a recession only because inflation hides it. Remember, the definition of recession to me is when growth less inflation is less than, growth is less than inflation, with GDP. So, if GDP is running, 2% and you have inflation running, 3%, you're falling away. And I think that's what we're seeing here. I don't know if we're going to talk about this later. I forget. I sent you so many things, but actually with all-in wages and all-in costs, we've been going negative here for the last 3 or 4 years. So, people are just actually going down the escalator right now, and they're too exhausted to try to climb out of it. So just another thing to keep an eye on, Phil, this is bad because they will repossess those vehicles, and then you don't have any way to get to work. So I think it's going to become maybe another cash for clunkers thing going on, or some sort of moratorium soon, because I think you're going to see this raise its ugly head, Phil, because a lot of people have financed cars. There are very few people that own their own. My last truck I owned for 22 years, so I don't mind getting one. I'll have this truck paid off probably in the next 12 months, and I'll ride it until I can't drive anymore. So, but people don't think that way, and I think it's going to become a big problem for people.
Yeah, I mean, look, we now have over $1.5 trillion in total auto loan debt balance. Okay, so this has grown tremendously from 2010, right after the bust, right? Just grown tremendously. And, this isn't aggregate loans that were taken out. This is currently what's on the books that people still need to pay off, 1.63 trillion. So it's a big, it's a big shoe to drop here. And I think you're going to see a big default on a lot of this. And these are the things that, where black swans come from because, we weren't counting on everybody not making their payments, and all of a sudden now these companies that are servicing this debt, nobody's paying their note. What happens? So one thing leads to another, margin call on margin call, and this is how this is how '08 unraveled. It was basically one thing breaks another thing breaks another thing. And so yeah, there's a big risk, I think, here in terms of this. We're basically now, the delinquencies here in the blue line skyrocketing, as you mentioned. I like your point too, that inflation can kind of mask a lot of these things, right? And that's why the markets can get dislocated as we've been driving the point home. But you really have to pay attention to these metrics under the hood, the Russell, the amount of companies not profitable is growing and things like that. So we're just seeing a lot of anomalies that tell us that the economy is not growing, the economy is not expanding, and really we're a consumer economy. So ultimately the consumer is dying. And so I think that's ultimately I think that's going to be the narrative going into 2025. But it's kind of funny because the market's buying you a ton of time here. And like Bob has told you guys, we're going to ride it. We're going to have fun with it until the party stops. And even then, we'll be hedged to the downside. But it's consider it a gift what we're getting here, because ultimately, as Bob has said, we're going to start pricing this stuff in. It's going to come next year, and it's not going to be pretty. But if you ignore all of these signs, I don't know what to tell you. You're going to reap what you sow if you do. But if you're going to be prepared for the turn, shore up what you can, you'll be doing really good as we come out of this. I mean, the bright side to this is, after 2025, 2026, I think toward the end of the decade, it's kind of like that forest fire. You're going to have green shoots again. And if you play it right, you'll jumpstart your performance of your portfolio, your 401ks or whatever. If you play that right, you just need to get one cycle right. If you did that in '01 or if you did that in '08 just by itself, for the lifetime of your portfolio, you're always going to outperform the market, because markets generally most of the time always go up. You just want to step aside for those 1 to 2 year windows when it comes crashing down. And in the way that these markets are with leverage, that's typically a 40 to 50% correction.
Yeah, don't listen to people that say just write it out or dollar cost average. And normally, if you get a 5 or 10% correction, absolutely. But when you have these secular moves, just better to step aside, or hide out in bonds or hide out in the high yield pair trades. You got to let the, as we used to say in the military, let the tanks roll over you and then take out the infantry coming behind them. Okay, no sense in trying to fight a tank, and just wait for the initial surge down. And what we should talk about that, Phil, the 3 waves down in a bear market, because most people think it's all clear after the first wave down. It's the second wave, where they like to call it the C wave in Elliott world, where usually catches everybody off guard. And so be prepared. It's going to be really, really interesting.
All right, guys, let us know your thoughts in the comments below. And if you need help navigating these markets or want to join us in the room, head over to tradegenius.co and check out our specials over there. We'd love to see you. We'll talk to you on the next video. Take care.
Trade Genius.